chart. Let me pull this up for you guys. If I go to the 60-minute chart, you can see we put in a low, then the market churns in here. We haven't taken out the lows, which means that this is really the high, 140.84, somewhere in there. So this is really what we need to see violated before we know that the market has an intention to go higher. Now, if we get up there, we have $600 or something like that, and we're not going to want to just sit on that. So what we're going to do is take off half of our position right there on at 40.83. So I'll just go ahead, place that sell limit order, and we'll cut it down so that we take off half of our profits if we get into that zone. And I want to make sure I get filled. I'm not going to get greedy with it. So I'm going to take it all the way down here so that I know if the market spikes into this level again that I'm going to come off and look at it run. There we go. We're about to get our profits taken off. About $500 now, $480. Levels violated, levels violated. Now we're waiting. We got to be patient. Have to be patient. S&P rallying as well here. And I'm just stalling here, guys, to see if we'll actually spike up and grab this first target. It'll mean about $250 in profit if we do get there. And then I want to talk to you about structure. So, again, I'm just going to give it a couple of minutes here. But actually, I can talk about the structure while we're doing this. But I want you to pay attention, guys, to exactly what happened over the course of this trade. And I'm just going to grab my line tool, and I'm saying, here was the support level, basically where we looked at getting long from. We looked at it on a different time frame, but this is basically it on the 5-minute chart. The market had rallied and put in a high. Right there. I'm a little bit above it, but just, bear with me. Then the market pulls back. We retest it. We've gotten long. Now what are we first looking for? We're first looking for that level, because that's going to be the key level that tells us whether or not this is just a consolidation before we roll over, or whether we're actually in a position where the market could go higher. In this case, boom, we get the rally. And we put in another high here. We'll delete this stuff because we don't need it anymore. We put in another high right there. We don't quite break these highs. And then the market pulls back. Where do we pull back to? Look left. Structure leaves clues. Again, exactly what we're going to be talking about on Wednesday. Market finds support, rallies, retests that support, still finds it. Now, what happens then? The market goes bam and explodes. These were buying opportunities, loading the boat, smart traders getting on board before what? Wham! The market explodes. We breach this high. We breach this high. Where do we need to be looking now? Where's the potential area? Right here. This is the critical area right here. Why do we know that? Well, we know it not only because it's the next level on our 5-minute chart, but if we go out to our hourly chart, you're also going to see, as we just talked about, a major level there. And this will be, guys, the turning point. If the market gets above that level, we're going to retest trendline resistance. We're going to take off part of our profits there. That way we've got some money in the bank. We've already booked some. We're already going to guarantee ourselves a profitable trade, although it won't be very profitable if we get stopped out. But the market now is short of our target. We've not come up into the resistance level yet. And so what we would expect is after this long explosion up is that we get a little bit of a pregnant pause here before we retest the zone. But guys, what I want you to get out of this is you don't have to have a bunch of fancy indicators on your chart. You don't have to pay. You don't have to have some whiz-bang trading system. Those are extremely valuable. I mean, I do that in the education business. We have those, and those can be very, very valuable tools to you. But again, you don't have to have that. If all you understand, if you've been educated on language of the market, if you've been educated on, and your knowledge base is good on market dynamics and market structure, then you can trade off of that. Where's this market likely to pull back to? Where's this market likely to pull back to if it does? Look left. Structure leaves clues. high probability we're going to come right back into that level there. Why? Because that was previous resistance and held there significantly. So if this market does pull back, it's going to probably pull back right into there. And if it does pull back into there, if we do one of these numbers, boom, and then rally, guess where our stops get to go? Well, now our stops get to roll to right there. And we're going to protect even more of our profit. So we're going to take off half of our profits and we're going to protect the balance. Now, if the market just goes straight north, we're going to take off half of our profits, but we're not going to be able to roll our stops because the market didn't give us a place to do that. So we'll have to watch and be patient and see what this market does. But this has been an 8-minute video. Let me go ahead and pause it, and we'll come back after the market does what it's going to do. Well, there you go, guys. It wasn't but a couple of seconds after I stopped the video that we hit the initial targets there, and now the market has retested that resistance level and pulling back here a little bit. Now, I would expect, the logical stop for this thing is back here, and we'll have to wait and see what happens. But we have come off half of our position, about $250 in profit there. The balance is in a profitable position way back down here because we have to respect our structure. So we'll see what ends up happening here, if this market can actually breach these highs on the new structure highs or not. And if it can, then of course we'll be looking at making even more money on this trade than we already have. And I say the proverbial we. You guys, of course, catch this after the fact, but I do this for training. I do this so that you guys can begin to understand the thought process, and not only that, but see the discipline and the clear line of thinking that happens when you trade. And for many people, it's a massive confusion and frustration and emotional turmoil, and it doesn't have to be like that. Some days you come in, you make good money, some days you don't make anything, and other days you lose money. But all you got to do is just keep coming back to the market. Keep coming back. And you keep your trading size small. I mean, this is, a $500 move here, for some of you, that's astronomical. For some of you, that's a huge amount of money to make. If that's the case, then don't try and trade like that. Don't be buying single lots. Buy mini lots. Buy micro lots. Maybe your $500 move is a $50 move. Okay, perfect. No problem with that at all. The important thing is that you're following a set of procedures, you're following a set of rules that are going to ultimately help you to become profitable. And this is just a perfect example of that. And I'm going to continue to watch this trade. I'm going to produce this video to get it out to you guys, but I'm going to watch this, and I will update you when the trade is complete to show you guys, how it ended up playing out and what ended up happening with it. But it's just again another example of a trade, a real-time trade that you guys get to see and feel and be part of. I'm liking doing this. If you guys are liking doing this, you guys like the fact that I'm doing this, give me post something at the Trading Underground on this under the video, and just let me know, hey, I'm finding this really valuable, or I'm not finding it valuable. I wish you would be doing X, Y, and Z differently, and I'll try and put together some stuff that will really be of benefit to you. So anyway, till next time, guys, good luck and good trading. My name's